And at the end of 17, I had this realization that, well, if you have a system where you can displace trust with truth and you can transact bilaterally without counterparty risk, you could transform all of capital markets, because the way that capital markets are built is really predicated on not having those two things and requiring intermediation. And if you can take all these marketplaces that have multiple people sitting between a buyer and seller, like a stock market, you have 7 people that sit in between a buyer and seller. Swipe your debit card, there's 5 people that sit in between the buyer and seller. If you could distill all that down to just buyer and seller through blockchain, you would disintermediate trillions of dollars of market capitalization. And that's what got me really into the blockchain ecosystem and the genesis of Figure and Provenance.
We making moves. We making major moves. We making moves. We making major moves. We going all in like we got nothing to lose. We making moves. We making major moves.
What is up, everybody? I'm Mr. Man. Welcome back to my channel. Today I had the privilege of interviewing Mike Cagney. To give you a quick rundown of who Mike Cagney is. Mike Cagney is the co-founder and CEO of Figures, where he leads corporate strategy and development. Mike brings decades, like legitimately decades of experience in the financial industry to his leadership of the company. Previously served as CEO and chairman and co-founder of SoFi. So with that being said, here's the interview that had taken place between myself, one of my colleagues 18, and Mike Cagney. I hope you do enjoy this.
Indeed.
Well, I want to start off by saying welcome to my channel. I'm Mr. Man. I appreciate you taking the time out of your day to come chat with myself. Was there somebody else you were waiting for? I recall you had included them in the Google link for the
No, it's just me.
Okay, perfect. And this is my colleague 18, part of my group, and we'll just be, I guess, taking the time to interview you and learn about what Provenance is doing, as well as taking a deeper insight into who you are. So, in doing so, I had taken some time to educate myself on who you were, and I seen that you had gone to Stanford. Are you able to tell us a bit about yourself and your time at Stanford?
Sure. So I'll rewind it a little bit. So I started my career in finance back in the late 90s, and I was running financial products at Wells Fargo, which included proprietary trading. And I left in 2000 to do my first startup, which was a wealth management technology company called Finaplex. So they sold to Broadridge in 2006. And I'd started a hedge fund called Cabazon, and Cabazon grew and traded through the financial crisis and all the stress that came out of that. And in 2010, I had a really strong desire to go back and do something entrepreneurial, because all I was doing was staring at Bloomberg screens at that point. So it was, just watching things blink all day long. And Stanford had this really interesting fellowship for a 1-year fellowship at the Graduate School of Business that you go down and basically can do a lot of what you want. So it isn't really prescriptive in terms of the curriculum. And I applied, and they said, we're actually full. You applied too late. You're not, do you want to do it next year? And I said, by the time next year comes, I'm going to be doing something completely different. And then fortunately, someone had dropped out. And so I got the slot and went into the GSB in 2010, and really went in there with the idea of starting another company, and had been speaking to a bunch of my colleagues and classmates and so forth, and came up with the idea of SoFi as sort of this way to democratize financial services, the ability to bring more affinity into financial services. So you have alumni who graduate who invest in the loans of the students that are there. And figuring out that we could replicate that. And so ended up meeting my 3 co-founders at the Graduate School of Business, and we spent most of our time there, the little over a year that we had, just working on SoFi and how to market it, how to get it out, how to get it to work the right way. And so when I graduated in 2011, just kind of leaned in and started SoFi. Now, what's interesting is the whole time I kept my hedge fund going. So I would just sit in any class I had and have my Bloomberg screen still on and trade. but concurrently was doing the work around building SoFi. And so we launched SoFi in 2011, really under the premise of this whole democratization and affinity finance. And we were a little bit of a victim of our own success because so many people wanted to loan. We couldn't raise enough alumni capital to satisfy that, and so we ended up going to the traditional capital markets and doing securitizations and typical transactional stuff to finance those platforms. But that's sort of the brief history. And then I left SoFi in end of 2017, and I'd been thinking a lot about blockchain, and in particular about Bitcoin. And one of the things that I had as sort of an aha moment, because I'd been giving lip service to blockchain for the prior couple of years. I said, blockchain's great and Bitcoin's great, but I didn't really understand it. And at the end of 17, I had this realization that, well, if you have a system where you can displace trust with truth and you can transact bilaterally without counterparty risk, you could transform all of capital markets, because the way that capital markets are built is really predicated on not having those two things and requiring intermediation. And if you can take all these marketplaces that have multiple people sitting between a buyer and seller, like a stock market, you have 7 people that sit in between a buyer and seller. Swipe your debit card, there's 5 people that sit in between the buyer and seller. If you could distill all that down to just buyer and seller through blockchain, you would disintermediate trillions of dollars of market capitalization. And that's what got me really into the blockchain ecosystem and the genesis of Figure and Provenance.
Awesome. So if I'm understanding this right, with Provenance, that platform, that infrastructure itself, are you providing the infrastructure for underwriters essentially? And I ask this question because as a real estate investor, I'm aware that when I go to the bank would now go to the underwriter, and the individual companies that you're partnered with indicate to me that Provenance is the platform for the underwriting position for, I guess, decentralized platforms. Is that correct?
Well, there's a couple of pieces to it. So the first piece is with Figure. We started Figure in 2018, and the whole premise that we had was we could use blockchain to originate, aggregate, and securitize assets and cut about maybe 100 basis points of cost out of that ecosystem. And I went to a bunch of banks in 2018 and I said, hey, I think you can do this. And the banks were like, oh, this is great. This is awesome. We'd like to be the 10th bank to do a securitization on blockchain. So there was absolutely no appetite for any bank to lean in and be first mover. And so we created Figure to be that asset originator, that first mover on chain. And we started originating loans on chain in 2018. We did the first warehouse that year. We did the first securitization in March of 2020. And then in 23, we did the first AAA rated securitization of blockchain loans. And we've done about 41 billion in transactions on Provenance, lending transactions, financing transactions, and so forth. I think we have about 12 or 13 billion at TVL on there right now. But the key thing that we did, and 18, I would absolutely will give you a chance to speak. Sorry, I see your hand up there. But the key thing that we did is we have 140 third parties that use Figure technology to originate assets on chain. And so it's not Figure originating most of the assets anymore. It's actually the mortgage companies and the solar installers, all these other people that leverage that technology. And what we did is we created a homogeneous loan. So every one of those loans is the same. It's a guaranteed rate loan, it's a Figure loan, it's a movement loan. None of those loans are different. They're all underwritten the exact same way. And that homogeneity allowed us to do something pretty disruptive on the capital side, which is we have one marketplace called Figure Connect, where all the originators and all the buyers go to buy loans or trade loans with a common loan purchase agreement. And this sounds trivial because you're like, well, why is that a big deal? All non-GSE credit, so non-Fannie and Freddie and Ginnie credit, historically has been these one-off bespoke pools of loans that negotiate specific loan purchase agreement details, and those pools become illiquid and as I said, non-homogeneous. What we did is we brought homogeneity in there, and that created a foundation to leverage the certainty of blockchain to effectively create a liquid ecosystem or liquid marketplace has never existed for private credit. So we run bid wanted in competition, offer wanted in competition, loan transactions in that Figure Connect marketplace all the time. And those loans trade like real digital assets. They instantly settle. There's no 2-week diligence period. There's nothing, in terms of what's going on there. So it's a pretty important innovation, and I'll extend that into a lot of interesting Web3 applications first. But let me give 18 a chance to ask a question because I saw he had his hand up there.
Yes. So I've first off, thank you for coming, and I've been trying to get you on somebody's platform to speak. But the biggest problem that I see that Provenance, Hash, and Figure and you have is that you don't have, and I hate to say remedial, but you don't have a remedial conversation for the people that made money off of a ugly drawn NFT, and now they have money in the crypto realm or whatnot. So it's sometimes when you speak, it's going over the head of the people that could possibly get involved with the actual project of Provenance, Hash, and Figure markets. So I have like a rapid fire glossary educational piece, because you just mentioned some things that I think is going over their head. So you just said BPS. Can you explain what a BPS is?
Sure. It's there's 100 basis points and 1%. So if you're saving 100 basis points, you're saving 1% of cost.
Okay, so you just said that Provenance Hash has done over $46 billion in tokenizing real world assets. So you're basically saying 1% of that value was saved by people doing business with you. Is that not correct?
Yeah, we've done 41 billion of transactions, of which about 10 billion are securitizations. So do 1% on 10 billion, and that's what's been saved so far.
Okay, so I was watching another video where it says that you probably did 6% of the total HELOC loans in the United States of America. Is that correct?
I think it's much higher than that. I think we're probably close to 20%.
Yeah. So I mean, I apologize for the way that I'm coming at you, but I mean, I consider you like the John Wayne of crypto, and you're like the general that's allowed to leave Area 51 Ghost Chapter and actually tell us something, because a lot of people are invested in projects based on hopium, like, hey, by 2030 this is going to do this, but you're actually doing stuff now.
Absolutely.
And it's a beautiful thing to actually see something working. And you're you guys use the words immutable. What does immutable mean?
So immutable just means you can't change it, and that's what gets you back to truth versus trust. That you know for certain what something is. You don't have to worry that someone came in and modified anything. And by the way, I'm going to definitely talk to how we're going to make Provenance more accessible to traditional crypto investors, how we're going to help facilitate much more DeFi activity. But one of the things that I think you'll find really interesting over the course of the next maybe 6 to 8 weeks, we've done so much work with the big TradFi firms. So, the Apollos and the Goldmans and others of the world, they've never been able to say anything about it because the regulators shut them down and didn't want them talking about doing anything on public blockchain. And that headwind has become a tailwind, and you're going to see press releases come out of Figure and others about how much the traditional financial ecosystem has been leveraging that technology on Provenance, and it's extensive.
Okay, so now we got to get. I'm enjoying this here. Okay, so now with that, you're basically talking about J.P. Morgan and the Singapore Central Bank and Project Guardian. And some of the stuff that you guys were doing from Hyperledger, and I think you guys shut that down, and you went to the Cosmos SDK. What is it? SDK. So,
SDK.
Yeah. So I believe. Can you explain what digital fund services are, digital debt is, and the tokenization of collateral network that all of that was going on?
Yeah, and look, I can tell you that the situation, the press release for JP in Singapore and Provenance, that was much more proof of concept. What you're going to hear about over the next 6 to 8 weeks is actual transactional activity that's been happening with the sell side banks and Provenance and Figure. And so for example, we use a registry on Provenance called DART, stands for Digital Asset Registry Technologies. But DART is a competitor to MERS, which is the Mortgage Electronic Registry Service. It's how almost all electronic mortgages are recorded. And at this point, nearly all of our counterparties are using DART, not MERS. And so you're seeing this transition of people moving from Web 2 to Web 3, and they're doing it because it makes economic sense, because it saves them money, it reduces risk, it reduces costs, and that's what's necessary to happen. And so when you talk about things like putting funds on chain, and I've been a pretty vocal critic of this, and I get a lot of grief from the RWA community. You know, blockchain really matters when you can create a native digital instance of something and put it on the blockchain, so you know for certain that it is what it is. Putting a fund on chain by itself doesn't really do anything. What becomes valuable is when you put that fund on chain, and now you can use it as collateral to buy Bitcoin, for example, right? Or use Bitcoin as collateral to buy a figure REIT. Like, once you can start building that cross collateralization, you unlock a huge amount of capital that people can deploy, where right now they can't because it's siloed. And so if you go to Robinhood, you know, sure, you can trade Bitcoin on Robinhood and you can trade equity on Robinhood, but you can't cross collateralize them. And so that's a fail, right? What you want to be able to do is use one as collateral for the other. And that's what I think is going to happen in the fund space. I think you're going to see funds come on chain where not only can you cross collateralize, you can more easily lend to them or lend against them. And you're going to unlock a lot of capital for people to deploy where traditionally they've not been able to access that.
Okay, let me ask you another question, because when I was in college, I used to go take pictures of houses for banks to make sure that it was an actual house there. And, you know, they would want me to do it like every 2 weeks to just make sure the house was still there when they were trying to do the process of the loan. And I just heard you saying that DART takes over Merck and whatnot. I guess this is a loaded question, but how do you think Provenance hash and figure could have prevented the housing market crash of 2008 with the fake mortgages?
Yeah, well, look, you can't use blockchain to defeat fraud. So if someone wants to lie about their income or lie about their property value, you know, blockchain is only as good as the data that you put in it. And if you put in bad data, it just becomes immutable bad data, right? What it can do that would have been a huge help to us in terms of the financial crisis is if we had done all that mortgage-backed securitization issuance on chain, we would know who held every bond. And the problem that we had in the crisis was, you know, the real estate values were falling. You wanted to go in and modify the loans to keep the borrowers current. You needed consent from all the bondholders in that securitization to do it. And no one knew who the bondholders were. No one could actually track down the investors. And that inability to track down the investors and have that conversation, you know, made it impossible to work out any of these situations and really exacerbated the whole default situation that we were in. So we wouldn't have been able to prevent the crisis. What we would have been able to do is fix it a lot faster and not have the fear and uncertainty and doubt about who's insolvent, who's about to go under, who has exposure, who doesn't have exposure. You know, it was crazy back then. You had these mortgage insurers and you had no idea what they insured, how much capital they had, or what the loans were doing that they had insured. No transparency at all. And so everyone just sold them to zero, and that just created a death spiral. And so that whole death spiral could have been avoided, and the crisis could have been resolved much faster, and capital could have been deployed much more surgically if all this had been on blockchain.
Okay, now I've...
18, do you mind if I just step in for a second there?
Yeah, go ahead.
Yeah, because you're on the GFC here, though. I was curious about shadow banking within like the context of Provenance or the platform right now. Like, how does this platform solve for that? Because essentially anybody can do it, really.
So look, I think what people call shadow banking, I call democratized prime finance, in that I think the world's going to move to that. And you know, here's the interesting thing about it. And can you guys still hear me okay?
Mm-hmm. Hear you fine. Okay,
great. So here's the interesting thing about it. So when when you have an asset on the blockchain, you get perfect digital perfection to it. You can lend against it. You have certainty, you have control, you have certainty it hasn't been pledged out to somebody else or lend against to somebody else. And if you have to liquidate it, you have a 24/7 market you could lean in and do that liquidation on. And so I use this analogy that I do a lot of HELOC lending. My HELOCs perform really well, but there's HELOCs I lose money on, right? Not a lot, but there's a couple. I've been lending against Bitcoin since 2020. I've never lost $1 lending against Bitcoin because I have 24/7, 365 perfection of the collateral. It's 2 a.m. and you broach an LTV threshold, I can liquidate it out and manage that position. And so what I think is going to happen is we're going to move away from a very limited financing ecosystem, being the prime brokerage ecosystems like Goldman Prime and Morgan Stanley Prime and so forth. These prime brokers have about 2.5 trillion of capital they've lent out into the securities market. I think we're going to move away from that and into something much more democratized, where you and I, we have excess capital. We can just lend against a perfected interest on chain and set our rate, right? You might want to lend at 12. I might want to lend at 13. Wherever the market clears, it clears. And we basically reset that hourly or whatever the cadence is. And what we're doing is we're taking the control to capital away from those limited institutions and just democratizing it out to anyone. And that is, even though people might call that shadow banking, it's anything but in the shadows because it's on a public chain. It's totally transparent. Everyone who's, all the collateral there, all the debt that's, all the capital has been extended to it. And you see it 24/7, 365. And I think that's a really healthy thing for the financial ecosystem.
Okay. Can I jump in?
Yeah, man, go for it.
Okay. So your main product right now is a HELOC. And I did a little research, and they were based off of prime rate, SoFi, 6 months T-bills, and I think it's something like Covey or something like that. I didn't go to Harvard or Stanford for finance, so I really don't know the background of this stuff. But then you're basically getting ready to use crypto to back HELOC loans. How is that different, and how is it much better?
Operation? So here's the thing. What's interesting is a decent amount of our borrowers borrow against their home equity and go buy Bitcoin or other crypto. And the dynamic on this is normally if you do a HELOC and you're buying a pool or you're paying off debt or what have you, it's a straightforward transaction. You go up to 80% loan to value, meaning the house is worth $500,000 and the mortgage is $300,000. You'd give someone up to $100,000 HELOC that would put them at 300 plus 100 over 500, right? 80% loan to value. And that would be a normal course of lending. But my point was, well, if you're just buying Bitcoin or ETH or Hash or whatever it is you're buying, why don't we just hold that as collateral and give you more than $100,000, right? So we could give you $200,000 of Bitcoin instead of $100,000 of cash. And now you've got a $300,000 mortgage and a $200,000 loan that you bought that Bitcoin with, but you have a $500,000 house plus $200,000 of Bitcoin as collateral, right? So your loan to value actually goes down instead of going up. And everyone, not everyone, but people get scared about this. They're like, oh, well, what if the price of Bitcoin crashes? You don't want someone losing their home. And so you say, okay, if the price of Bitcoin falls 50%, we will liquidate the Bitcoin, use the proceeds to pay off your loan, and then you're just in a HELOC, right? That you just service like a normal loan. And so under no circumstances would a fall in the price of Bitcoin cost you your home, right? And we underwrite you to being able to support that loan. And the interesting thing is, take the scenario I just described where you got a $500,000 home and a $300,000 mortgage, and we gave you a $200,000 loan to buy Bitcoin. Let's say, disaster hits and Bitcoin falls 50%. All right, well, we sell that Bitcoin for $100,000. We pay off $100,000 of the $200,000 loan. And now you got a $300,000 home and a $100,000 HELOC, $300,000 mortgage, $100,000 HELOC, and a $500,000 home. You're right back to an 80 LTV loan, right? Which is what we underwrite you to be able to afford to begin with. So So what we're doing is we're giving people the ability to use their home equity to diversify their assets. And home price appreciation's been strong, but it's tapered off. And we think that our personal view is that it'll stay relatively modest. And so giving people the ability to diversify into crypto, we think is very powerful, and it's a great tool. And so we're excited about the enthusiasm we got around the product. We're actually funding loans right now on a limited basis. We're kind of working the bugs out of the process, but we're in market actually doing these loans right now.
Okay. If I can step in, 18, sorry, just quickly too. So I'm just curious, who exactly is your customer base? I asked that because when I look at debt service ratios right now and where we are in the economy itself, I imagine the customer base might be shrinking, but I could be wrong, because there's a lot of people who are out there right now who are strapped for cash and to go and take out a loan against their house to get Bitcoin. I'm just curious to learn a bit more about that.
Yeah. So look, there's 35 trillion of home equity, untapped home equity in the US right now. And I don't think it's a crazy thing to think that 10% of those folks would want to take their home equity and use it to buy Bitcoin, right? So you're looking at a $3.5 trillion market opportunity, which is huge. It's enormous. I mean, Figure does, our ecosystem, again, we're not doing most of the origination anymore, but our ecosystem does call it 600 million a month of production. And so, 3 trillion is many months of $600 million a month. And so, we just think there's an enormous opportunity there. And, one of the things that we have is a good pulse on the state of the consumer. And one of the cool things about blockchain is all the data on there is real time. So, traditionally, when you invest in mortgages, once a month, they show you a report of how the mortgages have done, and it's 30 days old by the time you get it. And what we have is real-time remittance reporting. So I can go on right now, it's 10:57 a.m., and I can go on to Figure's portfolio manager, and if I own a pool of loans, I could see every loan that's paid me as of 10:57 a.m. And so that gives us a much higher frequency indication of where consumer behavior is and how the consumer is doing from a stress standpoint. And thus far, the consumer's held up extremely well. We've not seen an enormous amount of challenge around debt servicing. I think part of it is when you go into a HELOC transaction versus when you go into a personal loan, you're not putting your house up as collateral, and it takes you about 5 minutes to fill out. A Figure loan, you're putting your home up as collateral, and it takes you about 5 minutes to fill out. And so you tend to get a virtuous signaling that I'm not going to take the Figure loan unless I'm sure I'm going to be able to pay it, right? And we underwrite it to make sure you can pay it. We look at your cash flows and make sure that you have enough cash flow to support the debt. But we haven't seen a marked deterioration yet across credit. Knock on wood. We hope that persists.
Okay. You're talking to a community that really isn't too gung ho about Bitcoin. So I guess my question would be, how long till you start with other cryptocurrencies like XRP?
Very soon. So it's basically anything liquid works in this structure, and so we will expand that out, and we'll also allow you to switch, which is one of the cool things. So in the not so distant future, you might take down the HELOC and buy XRP and use as collateral, and then decide midway through you want to switch to Solana, right? And you can do that as long as you continue to hold the collateral, or you want to switch to hash, you can do that as long as as long as we're escrowing the collateral. And so, it doesn't, from our standpoint, the collateral itself isn't as important, other than understanding the liquidity of it, as it is to just be escrowing that collateral. And in theory, and not in theory, in practice, like, we'll let you at some point go to the S&P 500 if you want to switch out to that, or if you want to go risk off, just go to stablecoin while you wait it out and then go back in.
Okay. Now, I guess my question, that's awesome stuff, but I'm sure you're not just gonna stick to HELOCs, because I think there was Oasis that was talking about tokenizing the profits of group of wine farmers and all that. So besides HELOC loans, what do you see in the future that Provenance Hash would be used for to try to generate? I mean, because obviously Figure is in the business of making money, but what else do you think that the blockchain would be used for?
Yeah, and one of the big things we're going to focus on, and you'll see this in the press over the next couple of weeks, is we're going to open up for first lien mortgages. So we're going to be doing mortgages on chain, and in a way that has a supporting ecosystem that looks kind of like a Fannie Mae or Freddie Mac, but a blockchain version of it, right? Like, if you consider them Web 2, it'd be the Web 3 version of the mortgage ecosystem. And then, we're in discussion with a ton of different opportunities around, receivables, basically anything that cash flows that we can put into this. But one of the two things that we're doing that we think are pretty interesting as it relates to the broader community, one is we're taking Figure loans and we're putting them into the foundation and creating loan participation units that people can buy and sell and use as collateral in DeFi, right? So you can go in and let's say that the foundation creates a $10 million pool of loans. You can go in and buy a $10,000 slice of that. And there will be DeFi platforms that will take that as collateral to the extent that you want to use it. But also, if you just want to get the exposure or have it and have it be liquid, you can do that. The other big thing that's happening, and we're kind of front running this ahead of where the stablecoin legislation is. But right now, we have a security version of stablecoin that we are internally testing and moving back and forth to each other. But it pays an interest rate of, I think right now, 4.8%. And so it's effectively a public security. Anyone can own it. It's freely transferable peer-to-peer. It doesn't have to trade on an exchange. So I can move, $20 to you. In fact, I will move $20 to you once I make sure all the bugs are out of it, just to show you how cool it is and to get you signed up for it. And you can take that. You can go buy, XRP. You can send $10 of it over to Mr. Man, and he can take it. He can turn it into cash anytime he wants during banking hours. He can turn it into USDC 24/7 when it's not banking hours. It's pretty disruptive, and we think it is a much better version of stablecoin.
So just to confirm, we're talking about USDF, correct?
It's actually called YLDS. So there's an S1 on Edgar for Figure Certificate Company, and you can look up Figure Certificate Company on Edgar, the SEC database, and you can see the filing for it. And it is we think a transformational blockchain application.
Okay. Let me try to get a grasp on what you just said here. You're telling me that you have a product that's the Wild Figure certificate that you can own that's similar to a stable coin, and just by holding it, you earn like 4% on holding that coin. And at any point in time, I can liquidate that and can do my thing. You also stated that the pools of like these banks or these loan originators or the people that buy loans, us as individuals or retails, we can actually jump in the same pools and participate in giving loans.
Yep. So you can
take my XRP on your platform, set it up to put it in the pool to then fund loans and tokenize loans, and then I'll get some interest off of that.
Yeah, what's interesting is you can use your XRP. You could basically buy the loans. You earn more holding the loans than you pay on the margin loan against that borrow. And so you can be, in a simple transaction, you can be long the loans, short a margin loan, and long the crypto, and net out at a positive carry. So being able to make interest in that position. And I'll do a post on that in the next week or so, but it's a good trade.
So we become a bank basically. Yeah.
Yep. That's why I said that goes back to the whole democratized prime, which is we are all going to end up becoming the bank, and that's what blockchain is going to do for us. It's going to level the playing field so that we all have the same access and the same economic. And so when you go and buy one of those loan participations, you're getting the exact same return that Apollo's getting when it buys those loans.
This is crazy. Okay, I got brain fog for a second. Okay, so let me get into this right here. Okay, so you were at Wells Fargo as a trader. You went to SoFi. You left SoFi. You started Figure. Then you got Figure Markets, and you were trying to create a whole platform where you can do this, but you got kicked back from the government and regulations and stuff. But I've been watching you on social media, and you've been trying to buy FTX, and you've been trying to buy Celsius and Ionic. What was all that about, and how does that benefit Provenance Hash?
So here's why we leaned in to do this. So when you're in Chapter 11 bankruptcy and you emerge, there's a special rule called 1145. And what 1145 lets you do is emerge as a public company without an S1. So you don't have to file an S1 with the SEC. The SEC wasn't letting any company go public that was a blockchain company, certainly not on a blockchain, right? So, the idea of doing a new public offering native to blockchain versus sitting at DTC, it was a non-starter. But this circumvented that because you didn't need SEC approval, right? You basically were able to avoid that through the bankruptcy process. And so the first order reason why I cared about those transactions was I wanted to get public equity on blockchain where you could use it as collateral for XRP, for example, right? And be able to buy one and borrow against it to buy the other, right? Or vice versa. And second order, I grew to have a lot of affinity for those communities. I think in the Celsius situation in particular, I think it's been a really, really tough bankruptcy process. And I think, the creditors weren't treated the best. In FTX, I think it's a shame they didn't restart the exchange because I think that would have gotten a lot of value back to the creditors. And, the problem in the bankruptcy is like in FTX, they're saying, oh, well, you're going to get, maybe 175% of your claim. But that was when Bitcoin was at $16,000, and it's at $98,000 now. And so getting 2x on 16,000 still is way, way, way off of where you would have been had you been able to hold your crypto. And so I've developed an affinity for the creditor community, and so with Ionic, I'm pushing pretty hard to not just get the stock listed, but give people liquidity if they want it. Ionic needs capital, and I think we're uniquely situated to raise capital into it to help on day one liquidity. But also, what it really needs to do is it should be distributing the Bitcoin it holds, and it should be borrowing cash, and that's a good structure and why you'd want to invest in the miner. And it's not doing that right now. So there's a lot of work to be done, but we're making headway. And look, I mean, you'll see a tweet from me later today that they've we filed the shareholders with our support. A couple of significant shareholders have filed a formal complaint in Delaware, and I'll link to it today and walk through what we're doing. There's a board meeting on the 17th. We're going to have, there's two board seats up for contestant, and we're going to put 2 board candidates in there, and we hope the shareholders support us on that.
Okay. So how does that benefit Provenance Hash by you getting those board seats?
So if we list Ionic on Figure Markets, that'll be the first public equity that's been listed native on blockchain. And I believe that there will be a lot of crossover between people investing in that versus Bitcoin and back and forth. And then I think that gives us leverage to go to other miners and say, hey, look, you're on the NASDAQ, you don't trade much, you can trade a lot more here, and start organically building an ecosystem of public equity that is going to take advantage of a better more favorable regulatory environment now than what we had over the last 4 years. And all those transactions incur hash fees, right? So every transaction you're paying gas fees on Provenance. And so the more transactions we can run through, the greater the gas fees and the greater the accrual to the token.
Okay, let me ask you a question. Well, what made you decide not to have Provenance Hash inflationary?
So June has taken over Provenance, and she's about to release a tokenomics document that is that. So let me, rather than me answer that, let me defer to her tokenomics document, which I think will be great reading, and I think you'll enjoy it.
Okay, well, let's go back. You used the word miner. You said you would contact the miners about taking their product off of the NASDAQ and putting it on your platform. What is a miner?
Yeah, the Bitcoin miners. So, there's a bunch of public Bitcoin miners, and they don't trade much on the NASDAQ. And our hope would be we could build an ecosystem where they'd have more liquidity in a crypto native ecosystem versus, the NASDAQ.
Okay, thank you for the clarification. Now, I got to ask you some questions on connections with other projects. Axelar has said that they're already connected with you, and I guess they're like an oracle or a bridge or whatnot. Are there any other projects or CEOs of different blockchains that you're involved with?
So we're involved with we're involved with a lot of them, and what you'll see, what June's going to do over the next call it couple of months is she's not only going to create those loan participation pools on Provenance, she's going to port them onto some other L1s. And be able to feed their DeFi ecosystem. So I don't want to announce who we're working with right now, but we work with a lot of folks.
Okay. You mind if I step in, 18? Just one.
Go ahead, do your thing.
Yeah. I just want to go back to partnerships here since we're on that. Your partnership with Forte, and the gaming for Metaverse. Can you describe this to me? Like that, I find that very interesting because we've been talking and discussing about the real world. And now we're, I guess, transitioning and shifting into this whole metaverse construct here. Can you elaborate on that for me?
Yeah, I'm not the right person to elaborate on that one, but I'll definitely connect you to some folks on our side.
Okay.
Oh, okay. Let me ask you. Usually when people deal with HELOCs, they also go into a concept of infinite banking, and I think Infinio, is that the proper name for the insurance company that's working on Provenance Hash?
Yep.
Is infinite banking and HELOCs eventually going to have some sort of a partnership on your blockchain?
Yeah, I mean, I think there's a natural synergy, which is they have life insurance policies on chain. They invest those proceeds. Those proceeds can buy HELOCs. Those HELOCs are on chain. And what's interesting is, as someone who might buy an annuity policy, I can then go onto the blockchain and at any point in time see exactly, how many assets the insurance company has against its policies, its investment performance, like all that stuff becomes transparent to me where it never was before. And I think that helps a lot. And I think that's the kind of ecosystem you're going to see building out. And we'll hit a flipping point at some point. Right now, the challenge when you put a fund on chain is, unless you're doing crypto or figure loans, most things you're buying are not on chain, right? And so you lose some of the benefit of and that immutability or certainty of truth. And so I think we're going to hit this tipping point where all of a sudden more things you buy will be on chain versus off chain. And I hope that's going to happen in the next year. And I think the regulatory environment's set up to support that.
With the, I believe it was Oasis and Provenance Hash that was on Project Guardian. I believe Oasis was using EVM, the virtual machines to bridge over assets from, Wisdom Tree. Was Provenance Hash also using EVMs, or was there an alternative that you were using?
Yeah, so we don't run any Ethereum virtual machines right now. We're talking about bridging or connecting into a couple of platforms that are EVMs, but today we don't. And so the activity that was happening in the thing that happened with Oasis, the Provenance stuff was all just native to Provenance.
Okay, so you said something about a fund and something else, like getting into this stuff. I saw some stuff about like Omnibus Bank. What is the difference between like Omnibus Bank and like venture capital cap table? Can you just elaborate on that and how Provenance Hash would I guess make their experience better?
Yeah, I mean, it just goes back to, and kind of breaking it apart into a couple of different pieces there. One of the key things is running cap tables on chain, and more than just running it for a registry, but running it for digital perfection, right? So, I can like Figures REIT, for example, we run the cap table on Provenance, and that way, if you want to lend or borrow against that REIT, I can lend against it and have true perfection, knowing that that is your share, that you haven't lent it out to anybody else, and it's not been encumbered, and it makes my lending decision easier, and the liquidity makes it easier as well. So, that's where we're going to see people leaning in terms of using blockchain for the cap table and for the registry. It's not so much that it's more efficient to use the blockchain versus a traditional database, because it's not, but it is that if it's on the blockchain, it opens up a bunch of use cases like lend and borrow that aren't necessarily there in traditional ways that we keep records.
Oh, okay. Now, currently, in order for me to get to your actual product, there's two ways. The first way, I have to get a Kepler wallet, go to osmosis, and I can't trade less than 10,000 tokens, or it makes the price spike up crazy. And then the other way I go to get it is I have to KYC, and then go through your whole platform, get a text message to log in, and you have stuff holding over here, but over there I'm trading. It's kind of difficult, but since I've been following you for like 2 years now, I've noticed that your company is not a pay for play operation. You guys figure, hey, we got a stellar product, and it's big bank take little bank, as we say here. But my question would be is what are you going to do to make it easier for people to access that are in the DeFi network and don't want a KYC?
One of the key things we're doing is we're going to bridge hash onto other L1s, and so you'll see this over the course of the next quarter or so, and it will be part of their native DeFi ecosystems, just like we're bridging loans over. So it'll be more available. You raised an important point, which is historically, we're not pay to play. We've never really promoted or pumped hash, because our whole view was, look, we need to build a sustainable ecosystem that generates fees. And at the end of the day, the value of any token, beyond whatever affinity you have for it, is the amount it yields back to you in fees. And our view was that the hard work was what we've done over the last several years, which is build up an ecosystem that's now generating a decent amount of fees and growing. And now we're at this inflection, and the reason that June took over on Provenance is she is very active overhauling the tokenomics and going to market with it, not just native on Provenance, but on other L1s in the DeFi space.
Yeah, I believe in one interview, someone said that it was like $500,000 to get your product on CoinMarketCap, $250,000. I was like, that, I didn't know that. You know what I'm saying? So that's one of the major reasons why I locked in with you, because I was like, these people are talking about real money. Because you're talking, I think, I'm the numbers are off once again. I'm not an expert, but I think it was like $1 trillion worth of HELOC loans in the United States of America alone. I think, some last year or something like that. What is the number for HELOC loans?
It's not that high, but it's big, and I can tell you, some of the big exchanges want up to 8% of your token stock as a listing fee, and so it's not cheap, and that's one of the things that, again, we haven't focused on it because we didn't need to, but we will be focused on it this year, and we will be making hash more available, which we don't like paying people a ton of money to list it.
Okay, so what is that number actually for HELOC loans that are done? You know off the top of your head?
Yeah, I'm looking it up right now. I should have it.
What, 50 billion? I'm off 950 million.
Yeah, it's about, across all lenders, including banks, is about 200 billion.
and you're saving, well, to use your financial terminology, about 150 bips, which is 1.5% of 200 billion. Some kind of way
125 bits, but yes, it's a big number.
That's awesome.
That should make the chain go where it needs to go then.
Absolutely, man. Absolutely.
Yeah, that's powerful stuff. So
guys, I appreciate you bringing me on. I gotta hop in a minute, but anything you want to cover to close, and thank you so much for spending the time with me today.
I greatly appreciate you allowing me to harass you and pull the information out. I guess my last.
This has not been harassment, believe me. I've been harassed before. This is not it.
Okay, well, is it 100 billion tokens, or is it, how many tokens do you guys actually have?
So there's 100 billion, but again, June's going to shrink that down as part of her tokenomics. So I'll make sure you're one of the first ones to get that paper.
Hey, shrinking is always good in the right situation.
Mike, I want to thank you so much for taking the time to come out and hang out with myself and 18 here. Both of us here appreciate your time and your knowledge and your expertise in this field here. And if you can just give the viewers information on where to find you on X or whatever other platforms that you can be found on, that would be fantastic.
Yeah, so I'm on X, Cagney. I'm on Telegram, Cagney. Those are two. I'm easy to find out there. So but I'm just at Cagney. I'm on LinkedIn. I'm also Cagney. By the way, not surprisingly, my email is mcagney at figuremarkets.com. So there's a person named Monica Cagney, and sometimes she enters my email address, and I get all her junk mail. But generally, I'm the first Cagney on all these platforms.
All right.
Awesome. Thank you so much. 18, did you have anything you want to say before we close out here?
Yeah, man, Mike, keep on being a gunslinger out there in the crypto world and make them step on their tippy toes. I appreciate you. You're keeping them on.
Awesome. Thanks, guys.
Take it easy, man. It's a pleasure to meet you, Mike.
Yeah, you too. We'll see you guys.
Take it easy.
We making moves. We making major moves. We making moves.